Why is Bitcoin, Nick, not as bad for the environment as many critics like to allege?
Thanks for having me back. And yeah, I'll start by saying, look, Bitcoin absolutely is an industry that consumes a lot of energy. That is by design. We needed to find a way to issue the units fairly. So to create a unit of Bitcoin, miners have to burn some energy. Satoshi thought about alternative ways to do it, but there wasn't really a better way to fairly distribute a monetary unit from scratch. Now, Cambridge Center for Alternative Finance has some good estimates on Bitcoin's renewable versus non-renewable share of energy. They find that it's about 39% as of their most recent study. The Chinese element is very interesting. Certainly some Bitcoins are mined with coal in Xinjiang province and Inner Mongolia. But if you look at the other provinces where it's actually, there's a lot of Bitcoin mining activity on a seasonal basis, you're looking at Sichuan province and Yunnan province. In those places, there's a lot of hydropower that was overbuilt over the last decade. And that's hydropower which would otherwise be curtailed. And so you see that being put to use mining Bitcoin. And so that's a cleaner way to mine it. So it's sort of a more nuanced picture than some of the critics represent.
So sticking with that nuance then, Nick, I mean, a lot of people would, when they sort of talk about how dirty Bitcoin is, they compare it to the idea of sort of, you know, how dirty sort of cash would be or swiping a credit card would be, and that's the comparison they're making. Is that a fair apples to apples comparison?
It's just very different. I mean, a credit network is a small layer in the broader payments, clearing, and settlement monetary stack, and ultimately those networks depend on the US dollar. So I would argue that since Bitcoin proposes an entire self-contained monetary and payment system, you should probably be comparing that to the whole dollar system and all the externalities that entails. And you could even, if you wanted to stretch the analogy a little bit, represent that the US military is one of those pillars that supports the dollar system. Of course, that's a big consumer of oil. So it really is a function of what you compare it to. A lot of people compare it to individual payments networks like Venmo or Visa. I'm not exactly sure that's a fair comparison because those are just small layers in the broader dollar system.
Nevertheless, I'm sure we're all hoping for a cleaner, greener future. You talked about how Satoshi had sort of thought about ways in which this whole structure, the whole mining concept could be more energy efficient. But what are some of the clever ways in which people are trying to adopt clean energy within the whole mining process?
Yeah, so the interesting thing about Bitcoin and proof of work is that Bitcoin is a geography independent buyer of energy. And we've never actually had that before. Generally speaking, we have to create energy near to population centers. That's not the case with Bitcoin. All you need is internet in order to mine it. So you have this interesting geography arbitrage situation where Bitcoin is a buyer of energy in those places where it might be curtailed otherwise, where energy might be abundant, but there's not a buyer for it. So that was the case, for instance, in the southern provinces of China that I mentioned, where there was far too much hydropower, and China hasn't done a good job of building the infrastructure to transport that to population centers. So that is the reason, partially, that Bitcoin is so abundant in China, because they had overbuilt that hydro capacity. There's another really interesting movement here, represented by a number of American companies, to mine Bitcoin with otherwise vented or otherwise flared natural gas, which is a byproduct of oil mining. And so in a number of places we see in the US, in Alberta, Canada, where there's a lot of oil activity, and the natural gas cannot easily be captured because it's not very economical to put it in pipelines to transport it. You see entrepreneurs setting up mining rigs off the grid where they mine Bitcoin, they capture the natural gas, and that is effectively neutral from a climate perspective, or actually positive from a climate perspective, because vented methane is a far worse greenhouse gas than carbon dioxide, which is what you get when you combust it. So there's some very interesting externalities or emergent qualities of the fact that Bitcoin is this sort of geography independent energy buyer.
So on the one hand, let's say there's a mix. Some of it is renewable, some of it is perhaps energy that would have gone wasted others, some of it is sort of classic hydrocarbons. You know, in your vision and in the vision of many Bitcoiners, Bitcoin is just getting started. It's not, you know, it's a fraction of the size of the gold, let alone the size of the US dollar. Does Bitcoin's total energy consumption source regardless? It doesn't scale, right? It just, will it continue to grow linearly, essentially along with price?
This is, yeah, so it's a great question, Joe. This is a point that a lot of the critics and actually the academic papers on the topic get wrong. So they assume a standard energy footprint on a per transaction basis, and then they extrapolate this. And that's probably not the way you should be running that analysis. The reason miners spend so much energy and so much effort on mining Bitcoin is because, for the most part, most of their revenue comes from the new issuance of Bitcoins. So right now, about 85% of their revenue comes from new Bitcoins being issued to them. But the interesting thing is that we're 88% done with that process. So in the future, most of the revenue from miners will accrue from fees from users paying to use the Bitcoin network. And those fees, it depends how you model it out, but I would actually expect that the fee intensity would cause a lower structurally miner revenue in the distant future as the subsidy trails off. So the subsidy is not going to be with us forever. It gets cut in half every 4 years, as we discussed on my prior appearance on this show, to great controversy. So it's a very interesting changing dynamic where you really do have to consider the fact that Bitcoin is going to be fee-based in the future, and you can use that to model out the miner revenue from there.
The thesis that has taken hold right now is this idea that Bitcoin is a sort of digital gold. It's this scarce resource that governments can't mess with. Right now, central banks are printing lots and lots of money to counter the ill effects of the pandemic. And Bitcoin, people are looking to as something that is outside of that world that central bankers can't tamper with.
If that is the case, what exactly then do people look at with regard to putting a price tag on it? How much of it is out there? You mentioned the scarcity value. What's driving the pricing dynamic right now? How do people know how much they should be paying? For stocks, you can use things like discounted cash flow analysis, dividend discount models, ways to kind of forecast out and discount back future flows. It is not the case with cryptocurrencies. How then do you drive value for that?
There's a bit of alchemy involved, and people are still trying to figure that out, to be completely honest. But there are analysts at big investment banks who have started to begin to actually put their own price points on it. Analysts at JP Morgan Chase, they've said that they think the price could be $100,000 per Bitcoin in the long term, which is actually still a far way to go from where we are right now, even though it might seem like Bitcoin is so high already. And one thing that people are factoring in is, if you look at the gold market, that is a multi-trillion-dollar market. And if Bitcoin can eat into that a little bit or just grow in that same alternative asset space, it could justify itself at being a higher price.
I want to actually just go back to some of the Bitcoin basics and ask you a question that comes up quite a lot. And that is of this notion of scalability. Bitcoin transactions per second right now are averaging, say, around anything from 5 to 10. Compare that to some of the payment processes out there, and I know it's not a valid comparison per se, but like Visa, MasterCard can process up to thousands of transactions per second. People question whether Bitcoin can actually become a usable medium of exchange if it doesn't have that scalability factor, but to be done in a way that also preserves the integrity of the technology and that it remains centralized. And I understand that there are solutions that are being looked at, but that means moving away from that blockchain technology. So how do you square the circle?
Yeah, it's a great question. And this is something that Bitcoiners have been struggling with literally since the white paper was initially published back in 2008. That was actually the first reaction to Satoshi publishing Bitcoin on the mailing list. The first response was, well, this doesn't scale. So this is not a new problem, but I think the way I see it, at least, and this isn't actually a view shared by the whole crypto community, is that there are real physical constraints on the amount of data you can put through the system. And if you run too much data through the system, then effectively it becomes impossible to sync a node, and that excludes a large share of potential users. And the whole point is that anyone can verify the supply, anyone can participate in the network. So if you're pushing too much data through the pipes, that becomes exclusionary and you lose the nice decentralized characteristics. So there is an upper bound on how many transactions you can include in the ledger because everybody has to save the transactions. So the way I see it is that Bitcoin probably maxes out at around 800,000 to 1 million transactions a day. You can maybe get some more with some efficiency improvements. but that you don't achieve scalability by simply pushing more transactions through. You achieve scalability by mimicking the way that other settlement and payments networks work, which is by introducing deferred settlement on second layers. So if you look at credit card systems, for instance, those interoperate with settlement networks like ACH or Fedwire or various clearinghouse systems where the transactions actually settle and the payments merely happen at a higher layer, but they're batched and they settle on a sort of end-of-day basis. So I envision it in much the same way with Bitcoin, although the system is less mature. So we haven't seen that robust development of the payments networks on top of the Bitcoin base layer. But I think the point is that you don't need the assurances that come with a physical final settlement for Bitcoin transactions for every single transaction. If I'm buying groceries, I really don't need the very ironclad assurances of transacting with Bitcoin. I might prefer to use a layer 2 transaction like Lightning at that point. So that's really the way I envision it scaling.
Nick, another element when it comes to scaling Bitcoin is around its energy footprint. And there's a lot of focus, a lot of grievances with regards to Bitcoin's energy footprint. Can you set the record straight and help us frame how we should assess and think about the carbon footprint that's required in scaling up Bitcoin?
The first thing to understand is that Bitcoin's energy footprint, which can be easily measured, it's a very transparent system, is different from its carbon intensity, right? So it depends what kinds of electricity inputs are being used to mine that Bitcoin. So if, let's say, Bitcoin was purely hydropower, which it's not, then the carbon intensity would be minimal. Now, if you look at what the best estimates have, we're looking at somewhere around 40% renewable energy that is used to mine Bitcoin, roughly 60% non-renewable. So it's a mix. I think it's a greener industry than many because of the unique sort of idiosyncratic characteristics, the fact that Bitcoin can be mined anywhere, whereas electricity is typically only produced near population centers, so that removes an interesting constraint. But certainly Bitcoin does have an energy footprint. Now, a lot of people correlate that with Bitcoin transactions and try and calculate the energy outlay of individual transactions, which I would say is not the most relevant comparison because it's actually the issuance of new Bitcoins, which is the thing that induces miners to burn that energy for the most part. And so once that issuance tails off, and it is declining every 4 years, it gets cut in half, that energy outlay declines.
Nick, we've seen a trend out of celebrities and even Elon Musk talking about Dogecoin. What is your view on that particular cryptocurrency?
Dogecoin is a playful project. It's a fork of Bitcoin, a rather ancient fork of Bitcoin. It was actually the first cryptocurrency I ever used. That was my introduction to cryptocurrency back in 2013. It was envisioned as a playful currency that had faster transaction times and could be used for tipping. It was really entertaining and fun back then. Today, it's less so. Now we're seeing a lot of people just using it as a vehicle for speculation. We're not actually really seeing people adopt it for its intended usage, which is sort of cheap, quick transactions. And so I think it's lost a little bit of that playful spirit it's had. The developers have abandoned it. Its code base hasn't really seen any meaningful update in years now. Its original creator has left. So it's sort of an empty husk, really. And it's somewhat disconcerting to see Elon Musk so enthusiastic about it because unfortunately, a lot of retail punters are going to lose money on Dogecoin in the long term because there's really not much there in terms of interesting technology. And the only thing it can really do is be zombified and stick around and be an empty shell for people's sort of expectations and for their entertainment.
There's two pieces to this. One is a big corporation like Tesla investing in Bitcoin itself. And then there's the separate component part, which is using Bitcoin for payment. I actually want to start there, if we could, for a second, which is to say, are you of the view that people are going to use Bitcoin for payment? And I ask because if you believe that Bitcoin's value is going to continue to go up, if it's considered an investment, it's unclear to me why you would necessarily trade the Bitcoins now for a car. Chamath Palihapitiya was on Twitter just yesterday showing off a piece of real estate that he traded at the time for what he thought was $1.6 million of Bitcoin. But in fact, he said today, I think it's something on the order of the piece of property that he bought for $1.6 million, he effectively gave away $128 million worth of Bitcoin. So I'm unclear why people would actually use this to buy their car tomorrow.
Well, Tesla is not the first company to announce that they are going to take payments in Bitcoin. I think we've seen this quite a bit, certainly over the last 7-8 years that I've been involved in the ecosystem. And really, for most companies, it's just opening up yet another avenue for additional customers or additional ways for people to pay them. How successful or how, what percentage of Tesla's sales will come in through Bitcoin obviously remains to be seen.
Okay, so I'm less bullish on that component part. What seems more interesting to me is the idea that the treasuries of major corporations are going to start buying Bitcoin. We've talked about it, actually doing it through Grayscale and other places because of some of the custodial issues. What kind of conversations are you having behind the scenes right now with companies?
Well, I think the important thing to remember, if you're a corporate CFO or a treasurer or even a leader like Elon Musk, we're not surprised to see this happening. They're looking at Bitcoin either as a reserve asset or for the diversification benefits that it may provide. And a lot of corporates are going to move into this. We saw a few of this, go on in 2020, and I think a lot more of it's to come this year. But it's important to remember that this isn't for a quick trade, right? These are companies that are, trying to navigate a low rate environment, looking to shore up their balance sheets, and they're going to be invested in this over the longer term, not just to, get out of this trade if Bitcoin moves 10, 20%.
But when corporate, Michael, when corporate treasurers or CFOs call you, and I imagine you're having these conversations, I don't know if you can speak to any of these conversations, I have to think that there's some dialogue about valuation, right? You have to say, if we buy now at 46,000, is that a fair price? What kind of volatility are we going to have? How are we going to run this, by the way, on our balance sheet, given the volatility quarter to quarter? Are we going to mark to market? We consider that? What kind of investment are we going to consider this, right?
They're not betting the entire house, Andrew, right? It's relatively small positions on these balance sheets. A lot of these companies have massive stockpiles of cash, and they do believe that there's a lot of room for growth. For a lot of companies, they're even just looking that despite the massive price run that Bitcoin has had, it still only represents less than, for example, 10% of the market cap of gold. And so they do see it ripe for opportunity.
Right. No, I'm appreciative of all of the arguments in favor of Bitcoin. I'm trying to get at, and if you could try to take us a little bit, are people not calling you?
Oh, certainly. We're not only having conversations with hedge funds and pensions and endowments, but now certainly corporates as well.
Okay, so when the corporates call you, I imagine there's a conversation. There's got to be a conversation about value, about where it is now, what the volatility is going to look like, how it's going to be accounted for, right? There's actually, if you're a publicly traded company, accounting for this becomes an issue, especially if there's going to be volatility. Just help us with those conversations.
Sure. Conversation point number one starts around regulatory concerns, and actually most of those conversations are characterized by a lack of regulatory concerns. A lot of the folks making decisions around this realize how much regulatory clarity has been provided around this. I think the second piece of the conversation is around sizing and timing. And so you're seeing corporations think about anywhere from, on the low end, maybe 25 basis points to on the higher end, maybe 100, 200 basis points over time. And they recognize that they don't need to get invested all at once. They've seen other corporations like MicroStrategy leg into this trade over time, and they ultimately believe in the growth of this. So buying Bitcoin, whether it's here 10% higher, 10% lower, ultimately is not going to matter if they believe that Bitcoin is going to do or have the type of growth that they think it is going to have over time. And I think the last piece of it has to do with portfolio construction. where does this fit on their balance sheet? Are they selling treasuries to make room for this? Are they, taking cash out in order to buy Bitcoin? Where is this going to fit in their balance sheet? And I think that becomes probably the biggest challenge for most investors.
We just watched Elon Musk take corporate treasury money effectively and invest it in Bitcoin. And given Jack Dorsey's interest in Bitcoin, I'm curious what your reaction to that was and how you think about that potentially for Twitter itself.
So we watch closely what other companies do to see what we can learn from them. And when we think about our balance sheet, we think about matching how it's invested and the currencies in which it's invested relative to how we might pay people, whether it's paying somebody who's providing a service to us or paying employees. So we've done a lot of the upfront thinking to consider how we might pay employees should they ask to be paid in Bitcoin, how we might pay a vendor if they ask to be paid in Bitcoin, and whether we need to have Bitcoin on our balance sheet should that happen. It's something we continue to study and look at, and we want to be thoughtful about over time, but we haven't made any changes yet.
What would be the tipping point for you, though? I mean, what is it you think you're either looking for, waiting for, that would actually put that over the top for you to make that decision?
Well, one of the key things we'd look at would be if people were asking to transact with us in Bitcoin, because then we might consider whether we would be transferring dollars to Bitcoin at the time of the transaction, or if we wanted Bitcoin on our balance sheet ready to complete that transaction. When we hedge currencies, when we do business in another country, when we think about all the different exposures that we have, we're really trying to match our assets and our liabilities. And we take the same approach to Bitcoin that we do to all the other types of risks that we have.
Well, I think in the current macroeconomic environment, most corporations are beginning to realize that their cash is going to be a depreciating asset, and they need to turn their balance sheet into an appreciating asset. So the obvious thing to do is to convert dollars that are being inflated at, expanded to 15% a year into a scarce digital asset. And that's what Bitcoin is. So Elon Musk is very progressive and Tesla is very progressive. I think this is part of a trend toward the digital transformation of balance sheets as people move from analog, traditional treasury assets like cash and bonds into Bitcoin.
Talking about a digital transformation of the balance sheets. And of course, we know, I guess historically, folks have been pretty conservative about the balance sheet. You did have a seminar last week. I want to kind of elaborate a bit more on the pitch that you're giving to executives on this, and what is kind of the hurdle that must be overcome for them to get comfortable with adding this digital asset to their balance sheets?
Well, I mean, the pitch is Bitcoin is digital gold, and it's sitting on the world's first digital monetary network. That network does the job of gold 1 million times better than gold. You can move it at the speed of light. You can program it 1 million times a second. And it's been appreciating versus the US dollar more than 200% a year on average for a decade. So I think at this point, Bitcoin has emerged as the institutional safe haven asset. If you're a corporation and you generate $1 billion in cash flow and you buy back your stock, you're $1 billion closer to insolvency. If you borrow $1 billion to buy back your stock, you're $2 billion closer to insolvency. If you want to run your company to the benefit of your shareholders, of your customers, of your employees, and of your local community over the long run, you can't decapitalize the company. And in the modern era, cash is becoming a liability because the money supply is expanding at 15% and the purchasing power of the cash keeps degrading. Holding a 15% degrading asset for 8 years means you lose 75% of shareholder value. So the pitch is convert your balance sheet from a liability into an asset to the benefit of your stakeholders and use the world's first digital monetary network to do it. Bitcoin was engineered to do this.
I do want to kind of bring this topic up with you. Elon Musk, of course, has been tweeting a lot about cryptocurrencies, Doge in particular, also adding #Bitcoin to his Twitter profile. And if you look back a couple years ago, there were some issues around tweeting about Tesla, taking Tesla private. There's a whole SEC settlement involved there. So what do you think of regulations in this space? And when you see more publicly traded companies add it to their balance sheet and how they can kind of talk about it on social media, do you think we'll see regulations come in? And if so, what should those look like?
Well, I think there's been a great advance in regulatory clarity over the past few years. I think the IRS and the SEC have both designated Bitcoin as property, and I think that's been very good for the asset class. I think that we can expect a few more regulatory advances that'll provide more clarity. And as Bitcoin approaches regulatory parity with other types of assets like stocks and bonds and gold, I think it's going to remove the few remaining barriers that have given institutions pause. I think 1,000 institutions, 1,000 corporations started adopting Bitcoin as an asset for investment in the past 12 months. I think there'll be an avalanche of thousands more that'll be coming as they start to see that this is a very high quality Treasury Reserve asset on parity with other assets.
You know, it's one thing, Michael, to talk about companies investing in Bitcoin and seeing it take off on Wall Street, quite another to see it be adopted and go mainstream on Main Street. Today, we saw Twitter's CFO come out and say in an interview that they're thinking about playing in Bitcoin to the extent that they might actually pay vendors and employees in the cryptocurrency if they ask for it. What do you think some of the hurdles are to getting there? How do we get the consumers to buy in on the idea that Bitcoin could possibly take on the US dollar?
Well, you know, I don't think Bitcoin is going to take on the US dollar. I think that cryptocurrency is a misnomer. Bitcoin's digital gold. What Bitcoin is doing is rapidly replacing gold as a non-sovereign store of value. We've already got something on the order of 120 to 150 million people in the world using Bitcoin as digital gold. I think that number is going to rapidly march through 200 million, and we'll have 1 billion people that want to hold digital gold on a mobile device in the next 5 years. So when you think about it, I think the right way to think of it is I want to convert my long-term treasury reserves into something which is 1 million times better than gold, that moves at the speed of light. And it doesn't matter if you're a company or you're an individual or an institutional investor, they all have the same problem, which is how do I preserve my monetary energy over long periods of time? Expenditures day to day that you would normally do in dollars, people will continue to do in dollars. The payment rails are going to be MasterCard and Visa and PayPal and Square Cash. The euro and the dollar are going to do just fine. I think that the people that ought to be really concerned are gold bugs. Anybody that's storing their money in gold is got a big bullseye on their forehead, and that's at risk.
Michael, I guess one last question before I let you go. I should point out that you are the longest serving publicly traded company, CEO of an enterprise software company. So you've obviously experienced a lot. You mentioned earlier digital transformation, now digital transformation of the balance sheet. And I kind of want to bring this up with you and tie it in here. How do you think about this kind of generational shift? I've seen surveys at least a couple of years ago, kind of how more millennials favor cryptocurrency, Bitcoin, things like that. But as you kind of go up in older generations, not so much. So how do you kind of think about it as also a generational play here for companies?
Well, you know, I think the millennials, they discover things quickest. I mean, it was college students that found Facebook, but eventually everybody joined Facebook. I think it was 20-somethings that loved texting on mobile phones, but eventually Warren Buffett bought Apple stock. I think that millennials love Bitcoin because it's digital gold, and there's no way that 100 million people can buy a bar of gold through their mobile phone, but they are buying digital gold on Square Cash or PayPal or the like. But having said it all, they're just the vanguard. Eventually, the entire society is going to buy this. Institutions are coming into it. The Generation Xers are coming into it. And so it's an idea whose time has come. The millennials are leading the way.